Thank you. Good morning, and I really do mean good morning from a Manhattan point of view. It's certainly morning. A businessman who has the chutzpah to write books is subject to some withering roasts, richly deserved, I'm sure. I'd like to share a couple of them with you in case any of you have a similar inclination. Recently, Ted Sorensen, President Kennedy's assistant, said about my latest book, he said, Grey Dawn is a book that once you put it down, you won't be able to pick it up. And apparently I not only write worst sellers, if there is such a phrase, I've become a relentless bore. He went on to say that we're here this evening to canonize Peterson into sainthood. He said, every canonization requires a devil's advocate. He said, I'm very happy to fill that role. He said, when I think of him, I think of St. Paul, he said, the dullest town in America. Now, the subject of, I happen to chair the Council on Foreign Relations, and I'm very much involved in the so-called global challenges. Global warming and on and on. I'd like to make the case today why a far less discussed challenge, namely the aging of the world's population. And I want to make clear that what I mean by that is not just the unprecedented growth in the number of elderly, but simultaneously the unexpected and unprecedented drop in the number of youth in the developed world. And I'd like to argue that this may do more to shape our collective future than many of the other much more widely advertised challenges. There's a major difference between this challenge and some of the others, which are obviously quite conjectural. In this case, the elderly of the first half of the next century have already been born, and therefore they can be counted. And their daunting and unprecedented costs in terms of public retirement systems can be projected because the programs are in place. Now, there aren't many geezers in this room, either domestic or global. But for those of you who focus more on the domestic side of this and the baby boomer phenomenon, let me try to put this in a larger context. Until the Industrial Revolution, the chances of you running into an elderly person, by which we mean someone over 65, was about 1 in 40. By the 2030s, in many developed countries, that's going to turn out to be about 1 in 3. Some developed countries are now projected to achieve a median age of 55, which is 20 years older than the oldest median age as recently as 30 years ago. Now, of course, this is a result of the extraordinary growth in life expectancies. Global life expectancies have grown more in the last 50 years than the previous 5,000 years. If you take most developed countries and look at the life expectancy at the beginning of the century, it was about 45 years of age. And it's now over 75 years of age. Now, I use a metaphor in the book called the floridization of the world, on the grounds that we've all been there and we know what it looks like. That is, when will the percent of elderly that we now see in Florida be true for the nation as a whole? America gets there about 2023. But you may be surprised to know, if you don't look into these things, that Italy will be there in the year 2003, Japan 2005, and Germany 2006. Now this, of course, is going to put an unprecedented burden on working-age people, and it will hit soonest and hardest in Japan, which for a variety of reasons we can discuss, did not have a baby boom. So in Japan, between now and 2010, there's going to be a stunning 25% drop in the young workers under the age of 30. And that's now only 10 years ago. Now, another demographic tidbit of considerable relevance in these pay-as-you-go programs, and they're pay-as-you-go almost in every developed country. Over the next 25 years, the number of retirees who are receiving benefits will grow 14 times faster than the number of tax-paying workers who pay for the benefits in the pay-as-you-go program. As a result, obviously, the ratio of workers to retirees is going to shrink dramatically. It's now about 3 to 1. In 30 years, it'll be about 1.5 to 1 on average in developed countries, and could easily hit 1 to 1 in Germany and places like Germany and Italy. And the image that's useful to me is just think of one young worker not only supporting his own retirement, but supporting the retirement of an elderly person. Another daunting and yet wonderful statistic is the explosion in the old, that is those over 85. It's projected to increase by 6 times over the next 50 years. And this does not assume any of these biogenetic breakthroughs that we all read about, which could greatly increase those numbers if it came about. Now, this is significant for a lot of reasons. First, the old consume about 2 to 3 times the health care that the younger elderly do. If they get into nursing homes, and it's important to know that most of the public programs in the world do not include long-term care except for the very poor, the cost is 20 times more. The most tragic example of this, of course, is Alzheimer's disease. We have about 4 million now. It is projected in America by 2050 this is going to more than triple to 14 million people. The next trend that I found surprising, perhaps you will too, is the unpredicted and rapid fall in birth rates in the developed world. This has greatly intensified this aging trend. For example, as recently as 30 years ago in the world as a whole, there were about 5 births per woman on average in the world as a whole. That number has now fallen in half in a remarkably short period of time due to a variety of factors. I'm not an economist and certainly not a sociologist, but I've tried to do a lot of reading in this field. The factors that seem to explain this are rising affluence. People that have more money tend to have fewer children. Rising urbanization. People in cities have fewer children than people in the countries. Female participation in the workforce. Obviously, women that are working tend to have fewer. Birth control technologies, legalized abortion, and so forth. Now, the number of births per woman required to keep stationary population, the demographers call this a replacement rate, is about 2.1 babies per woman during their lifetime. Now, the number I just gave you of 2.5 is the global number. If you looked at the developed world, on balance it is already substantially lower than is the replacement rate. It averages about 1.6 taken as a whole. But Germany is 1.3. Italy has the lowest birth rate in the developed world, a little under 1.2. If I ever meet with the Pope, I thought I might discuss this with him and get a fuller explanation of this phenomenon. The U.S. is at the highest levels of the developed countries, about 1.9 to 2, and with our very high rates of immigration, we'll have a total rate that's slightly above the replacement rate. So unlike most developed countries, we'll have a very slight growth in population. Now, most developed nations, therefore, absent some major change in their policies, is going to confront a very new phenomenon, which is shrinking populations. It is now projected that there are a number of the major developed countries that, absent some major change, will see their populations fall by 1/3 to 1/2 over the next century. Now, developing countries, because they are still considerably above the replacement rate, of course, are expanding. And in my book, I use another metaphor. I take the 12 most populous nations in the world in 1950, and I take the base case of the same projections in the year 2050 for the 12 most populous nations. Only 50 years ago, 7 of the 12 most populous nations were in the developed nations. In 2050, only one country whose developed nation will be in that list, the United States. And let me read off the countries that will take the place of the developed nations: Nigeria, Pakistan, Ethiopia, Congo, Mexico, and the Philippines. Now, I spend about half the book, I guess, studying the fiscal impact of these demographic tidbits I've been giving you. And I measure them in a variety of ways. This group is very sophisticated. I don't need to explain the concept of unfunded liabilities here. It's very important because these programs are unfunded. In the developed countries, I took the numbers for all the major G7 countries. The unfunded liabilities total $35 trillion. If you then add health care, you roughly double those numbers. Now, given the euphemisms and the bogus accounting or fuzzy math or whatever we call it these days, this doesn't appear in the official public debt. But these numbers are about 6 times the official public debt that we all hear about. Now, the recent campaign has demonstrated that we're quite creative in coining euphemisms of various types that convey the impression to the public that these programs are funded when, in fact, they're not funded. The trust fund is such a euphemism. When I was Secretary of Commerce, Time magazine, I guess it was, called me a powerful Secretary of Commerce. And since there's never been a powerful Secretary of Commerce, including me, I started collecting oxymorons of various types. I have about 50 of them, and I'll be glad to share them with you. The House Ethics Committee was one of my next ones. I think the trust fund deserves a high rank in that regard. Perhaps we ought to call it the distrust fund, because, as you know, there are no assets in there. It's nothing but liabilities. It's a wonderfully convenient accounting and political fiction, but it's politically irrelevant. And this is true all over the developed world. For example, Americans during this last campaign, I guess I should say current campaign, were told that the trust fund would keep the Social Security solvent until the year 2034 or 2037 or some such number. In truth, you know, all that really matters in a pay-as-you-go system is what the annual operating cash deficits are. And whether you have a trust fund or not is totally irrelevant, because you still have to do the same thing either with a trust fund or without a trust fund. You either have to go out and borrow the money, or you can cut the benefits, or you can raise the taxes. So to give you an idea of the fiscal dimensions of this, just for Social Security alone, between 2014, when the boomers hit in big numbers, and 2034, where we're endlessly told the system is solvent, there's about $8 trillion of deficits that somehow would have to be financed. Throw in Medicare, and it's another 15 or so, or $9 trillion in today's dollars. So all this chatter we're hearing about how setting aside, even if we did it, which is questionable, $1 trillion or $2 of surpluses is going to somehow keep the system solvent really doesn't stand any rigorous analysis. Another way you could measure the fiscal effects is how much would spending have to go up. And I did this country by country, and for the G7 countries I looked at, it goes from about 9% more of the GDP to 16% more of the GDP. Give us a reference point. We spend more on defense than anybody. That's 3 to 5 times just the increase that we're spending on defense. So it raises the measure questions of crowding out, obviously. Now, another way of measuring these things is what kind of a tax increase would it take? And even if we ignore the so-called negative feedback effects of tax increases, I went around the world, and for most of the developed countries, it would take about 25% of payroll, or 40%. And that's on top of a payroll tax now in these countries that's already about 40%. So I think that's a fairly unthinkable number. The other way you could handle these gargantuan numbers, I suppose, is to have everybody borrow their way out of them. So I put the numbers together on the world's savings, and before many years we would consume the entire savings of the world to fund these programs, leaving nothing for investment. Now, to me, one of the really important philosophic questions about this issue, and there are moral questions as well, is whether in a media-dominated, short-term political economy of the type we all have, whether we can respond to one of these silent, slow-motion kind of crises, or whether it takes a Pearl Harbor type of fiscal crisis. And if there is going to be a crisis, in my view, it's going to be in capital markets, as one or more of these countries decides they can't raise taxes politically, they can't cut the benefits, so to hell with it, let's just let her rip. Now, when people hear these numbers, they say they're unsustainable. And of course, that's part of the point of confronting the numbers. We can't sustain them. But the real purpose of looking at them is to get some idea of the adjustments we'll have to make them sustainable. Another oxymoron, I guess, is a Nixon humorist. We had one only. A wonderful gentleman who died recently named Herb Stein. And he used to say, if something's unsustainable, it tends to stop, he said. Now, he said, if you don't like that, if your horse dies, we suggest you dismount. The question is really how we get to dismount and under what circumstances. And you have a variety of images you can imagine. Now, the fiscal news is quite lugubrious, but we shouldn't let ourselves get totally lugubrious, because in many ways it's a miracle. It's the miraculous triumph of modern medicine. And surely all of us will enjoy the extra years of life, not only for ourselves, but our family members, and would we have it any other way? Now, in thinking about what I might say to you, this is more of the background of the situation. I've decided that your interests are much more in the business and investment implications, and that's where I'll focus my comments. If you'd like to talk about a few of the other aspects, I'll be glad to try to do it. For example, I won't talk about the effects in non-business areas such as politics. There's some fascinating questions of what's going to happen to the political dynamics under these circumstances. Nor will I talk about some of the tortuous possibilities of rationing, particularly in healthcare, which I think is more or less inevitable, and some of the ethical questions that will be raised by discussions of rationing. I know how convincing investment bankers are on ethics, so I'll move on quickly from that one. I won't discuss the effects on culture, media, and entertainment, which I think will be quite profound, nor the effects on geopolitics and national security, nor the profound crowding out effects on budgets. President Clinton asked me to go on an entitlements commission that was very bipartisan, chaired by Bob Kerrey and Jack Danforth. We had 20 Republicans and Democrats on the commission, and we had a thoroughly bipartisan staff. I was quite stunned to see that after these great gentlemen looked at the numbers, they signed a report unanimously that said by the year 2030 in the United States, the entitlement programs would consume the entire budget, leaving not a penny for interest or anything. So there's some fascinating crowding out effects that are going to take place if we don't get these programs reformed. Nor will I spend time talking on immigration, which will obviously be a hotly debated response in some countries as they confront this unique phenomenon of not oversupply of labor, but a labor shortage in many of these countries. Now, let me then just focus on the economic and business effects, and I'd like to start at the macro level, and then we can talk about specific businesses or industries. You don't need to be an economist to know that GDP growth is a function of two primary forces: growth in the number of workers and growth in productivity. Now, I've indicated that many developed countries are going to experience a major shrinkage in the number of workers, absent some major change. And thus they are likely to confront the possibility of two phenomena: not only a shrinking population, but a stagnant or even shrinking GDP. Now, on the other hand, the emerging markets, as I've indicated, are going to continue to have major growth in population. Thus, for businesses that are correlated with population, I think we could expect to see much more emphasis on emerging markets than we have seen in the past. This will obviously require country-by-country analysis. Another macro effect, before we get into specific businesses, is how will it affect the global economy and global capital markets, and will these widening pension deficits trigger any meltdowns in global capital markets? Let's consider Japan. I mentioned earlier that they're going to have the first impact of this over the next 10 years. As you know, they have been the largest capital exporter in the world. Over the next 10 years, by our projections, the increase in their deficits that are caused by this rapid aging, you talk to any Japanese prime minister, and they'll tell you the aging society is their top policy imperative. It roughly equals or even exceeds all of their historical capital exports. So a very interesting question is what happens to the current account deficits that we have, for example, that are at record levels, and how do they get financed? Let's look at the euro and the European Monetary Union. The possibility we confront there is different nations in Europe face somewhat different challenges, and they might try to confront this problem on a divergent basis at different times. Let's take Italy, for example. Given their shaky political systems, their left-leaning traditions, their generous benefit programs, their very, very high taxes, will they try to run deficits way above the 3% of the GDP deficit ceiling that the euro has set and try to finance their way out of it? And if they do, what happens then? I'm a member of the Economic Club in New York, and I was the official questioner when Mr. Duesenberg was here from the European Central Bank. Mr. Duesenberg, I present this scenario to you. What exactly do you do if Italy decides that politically they can't raise taxes, they can't cut benefits, and they're just going to let their deficits rip and go out and try to borrow the money? He engaged in what we used to call the Nixon administration a long series of constructive ambiguities. And at the end of the program, something happened that's ever happened to me at the Economic Club. 7 people came up to me and said, Mr. Peterson, I've been coming here for years. I've never heard such a non-answer in my life as you did to that question. So I'm persistent, if nothing else, as Mr. Burstein can tell you here. And I asked the same question at a meeting of the chairman of the various Federal Reserve banks with Chairman Greenspan, of Andrew Crockett, who's the head of the Basel, the Bank of International Settlements. He again waved his arms a bit, and finally he said, well, I'm sure we'll find a political will to solve it. At which point a very, very senior government official in the audience looked at him and uncharacteristically said, Andrew, on what conceivable basis could we believe that? So I think we need to focus a bit on what some of these macro effects might be. Great Britain presents a particularly interesting situation. One of the things I've done recently is to look at the differences in the negative deficit swings country by country in Europe. And perhaps you're not aware of this, but there's some very large differences. And what surprises most people is that Great Britain is the only developed country in the world that, due to some fundamental reforms of the 80s under Margaret Thatcher, now has the lowest level of unfunded liabilities, the lowest level of spending by far of any of the developed countries. Just give you an idea here. In the case of Great Britain, spending by 2030 is only projected to go up 1% of GDP. It's 8% in Italy. It's 5% in Germany. Now, I'm not here to make specific predictions. As Dan knows, I once told a Blackstone client that I was predicting some outcome. And he said, Pete, on what basis do you make that prediction? I said, sir, I would bet my reputation on this. And he said, Pete, it'll have to be something more substantial than that. So I'm just suggesting possibilities. I'm not predicting. I think that I went to England recently, and I don't know how many of you have been there lately to discuss this subject, but I found the euro issue far more contentious than I had in previous times. A very interesting man who used to be at Warburg named Rodney Leach and now is at Matheson is heading a CEO effort against the euro. He tells me that over half of the British CEOs are now against it. I don't know whether that's true, but he seems like an honorable fellow. He said the argument seems to go as follows. We at Great Britain took our medicine. We have more or less resolved the retirement end of this problem. The rest of the European countries have not. Why should we get involved in a situation in which somehow we're going to have to assume the burden yet again? There was a witty observer over there who put it this way, let me quote, America did it right. First it had its Civil War, and then its dollar became the key currency. Europe appears to be on the verge of reversing this process. First it declares the euro, and then it has its Civil War. So I think there's going to be some fascinating things to watch on the currency volatility and so forth as this problem does or does not get resolved. Now, the good news about some of this is that most of these global aging effects, fiscal and otherwise, are kind of slow motion. And therefore, we have time, you have time, to think through what the implications are. Now, what I thought I'd do today in the final section is just look at certain sectors of the economy and not predict, but speculate on those that might be affected in some particular way, either plus or minus, by the aging phenomenon. First, let's look at some possibilities of industries that may decline in some of the developed countries. I emphasize some. For example, in those countries where the population is shrinking significantly and the GDP is stagnant or shrinking, I would expect that long-term demand for new housing, new office space, in the case of Great Britain, spending by 2030 is only projected to go up 1% of the GDP. It's 8% in Italy. It's 5% in Germany. Now, I'm not here to make specific predictions. As Dan knows, I once told a Blackstone client that I was predicting some outcome. And he said, Pete, on what basis do you make that prediction? I said, sir, I would bet my reputation on this. And he said, Pete, it'll have to be something more substantial than that. So I'm just suggesting possibilities. I'm not predicting. I think that I went to England recently, and I don't know how many of you have been there lately to discuss this subject, but I found the euro issue far more contentious than I had in previous times. A very interesting man who used to be at Warburg's named Rodney Leach and now is at Matheson is heading a CEO effort against the euro. He tells me that over half of the British CEOs are now against it. I don't know whether that's true, but he seems like an honorable fellow. He said the argument seems to go as follows. We at Great Britain took our medicine. We have more or less resolved the retirement end of this problem. The rest of the European countries have not. Why should we get involved in a situation in which somehow we're going to have to assume the burden yet again? There was a witty observer over there who put it this way, let me quote, America did it right. First it had its Civil War, and then its dollar became the key currency. Europe appears to be on the verge of reversing this process. First it declares the euro, and then it has its Civil War. So I think there's going to be some fascinating things to watch on the currency volatility and so forth as this problem does or does not get resolved. Now the good news about some of this is that most of these global aging effects, fiscal and otherwise, are kind of slow motion. And therefore we have time, you have time, to think through what the implications are. Now what I thought I'd do today in the final section is just look at certain sectors of the economy and not predict but speculate on those that might be affected in some particular way, either plus or minus, by the aging phenomenon. First, let's look at some possibilities of industries that may decline in some of the developed countries, and I emphasize some. For example, in those countries where the population is shrinking significantly and the GDP is stagnant or shrinking, I would expect that long-term demand for new housing, new office space, new production facilities, and that sort of thing may also shrink. We don't have many case studies of this because it's a very new phenomenon. So I got a hold of the top economist at the major bank in Buffalo, and I asked him as a favor if he would do a little analysis for me as what's happened in Buffalo. And there's some analogies here that are worth thinking about. Buffalo's population fell by 11% since 1960. Its elderly population increased by 57%. The share of young working adults is the lowest in the United States. The number of new housing permits is 36% of the U.S. average. And in the 1990s, housing prices fell from 81% to 66% of the U.S. median. Another area I think you will want to look at is anything related to physical infrastructure, roads, bridges, schools, etc., because you're going to have the twin phenomenon of both a declining population in some of these countries and a declining tax base. And earlier I mentioned the crowding out effect, but obviously a good deal of money for some of this infrastructure comes from public budgets. And to the extent that the political power of the senior lobby takes an ever larger chunk of the public budget, there'll be less and less available for some of these public expenditures, both software, education, and hardware. They won't be able to reach into the pork barrel. Maybe there won't be a pork barrel, who knows. So the construction industries, I think, may well be hit by a double phenomenon, both real estate and public works in many countries. So you may see some large businesses in this field moving very rapidly to emerging markets like China. Let me suggest kind of a general approach before we get into some specific businesses. I think if I were thinking about this strategically, I listed five factors. Namely, how is a given business affected by shrinking population? How is it affected by a shrinking or stagnant economy? And/or how is it affected by shrinking youth population? How is it affected by an exploding aging population? And how is it affected by volatile capital markets and exchange rates, which is clearly one possibility in some of these scenarios. Now, the other side of this is there are going to be some niches, obviously, where there are growth opportunities. And let me just illustrate some of these. Many of you are in the asset management business. I think there's a good chance that your business globally is going to be a very good business for two reasons. First, I suspect that there's going to be an increasing growth in mandatory private accounts of the type we have seen beginning in Singapore, Australia, Great Britain, and Chile. Why do I say that? Well, I think the public is going to come to understand what an oxymoron trust funds are and how what was supposed to have been set aside in trust is spent, and that the democratic political system has great trouble saving surpluses, as is now being demonstrated daily in Washington. And therefore, one way to secure them is to simply transfer the money to private retirement accounts. I think people may also come to understand that the public systems where the benefits could easily be reduced, and in some cases must be reduced, they're going to have to rely much more on their private savings. So I think the collection and investment of private savings is going to be a very interesting global business. The healthcare field. The elderly use 2 to 3 times or more of pharmaceuticals. There's obviously going to be a major growth in all kinds of procedures for the elderly, special geriatric services, cataracts, all sorts of things. There's obviously going to be all sorts of markets for specialty products, prosthetics, vision aids, hearing implants, organ cloning, all kinds of things. And in some countries like ours, we have a cultural predisposition to stay young, to be young, and to delay death, certainly. Gerontophobia, the demographers call it. You could see an explosion in a lot of anti-aging markets, vitamins, supplements, herbs, special cosmetics, air dyes, energy and sexual rejuvenators, and so forth. Certainly the retirement lifestyle business will change increasingly. I suppose to get very micro and personal. Sports might move much more toward gentler and low-impact type aerobics, Tai Chi and golf and biking and gardening, rather than some of the more vigorous activities. Some of the cruise line businesses will probably be interesting businesses. There's going to be all kinds of niches, I assume, for second homes that we haven't at the present time. I would expect to see quite a revolution and boom in trends towards lifelong education and training as a field. I don't think there's any question that one of the obvious reforms is going to be later retirement, but that's going to confront a major need, which is in the same way that sexism was and racism were among the major biases of the last 50 years. Ageism is going to turn out to be a major issue. So the whole issue of how we educate and train, computer training and so forth, the elderly, what you might call rehirement rather than retirement, and what are all the services and products that will be used to train them, I think will be an interesting business. The facilities for the old, remember, as I pointed out, there's not only going to be a huge ballooning of that category, but most public programs don't provide for long-term care. So there are going to be all kinds of facilities and products and service and financial products and so forth, long-term care insurance and so forth, I would think, for this explosion in the old. I suppose even the personal transportation business is going to be very much affected. Not only the design of vehicles that are much more appropriate for the elderly, new kinds of motor carts for retirement villages. I could imagine all kinds of new products that people are going to be designing. It turns out that the food tastes of the elderly have been at least very different than for the young. For example, they eat twice as much soup as the rest of the world. So maybe Campbell's Soup will be happy to think about this. There'll be all kinds of foods that'll be easier to prepare for them. Turns out the elderly are twice as likely to eat at restaurants. So there'll probably be a proliferation of new concepts for them. To the extent that immigration is going to go up, and I think it will go up significantly in some countries, often as a last resort, there'll be a whole variety of ethnic products and services. It turns out, for example, that immigrants use a lot of international communication because they're communicating, back home. So that's another possibility. Obviously, the whole death care business will, if you can call that death care business an interesting business, it will be a growth business and all sorts of plain and exotic services, I'm sure. That's a very happy note to end on. I'm looking at my watch, but remember what I told you, don't put this book down, which we sent them a copy, didn't we, everybody? Didn't I send you?
Yeah, well,
I think I sent copies out here. Another one of the jokes that my colleagues tell at Blackstone, you've all heard the Karnak, remember the Johnny Carson. Here are the answers. What are the questions? Well, the answers one year when the book came out were 100,000, 99,999, 1 and 0. What are the questions? The questions were, how many books did Peterson print? Second is, how many did he give away? Third, how many were bought? And finally, how many were read? So, if you do get that book, remember what Sorensen says, don't put it down, you won't be able to pick it up. Thank you very much.
I'm not sure in this forum you should spend a lot of time on this question, but I don't know who else to ask it of. In this imperfect world, is there a bunch of things in our Constitution or that fail to get into our Constitution that put us in this fix?
Well, I don't think the Constitution. We might have needed a federal accounting board. No, thank you. To have some accounting principles. You see, the capacity to set up fictitious accounts that we call trust funds and pretend as though these off-budget, fictitious paper numbers were real, and therefore telling the American people that you're taken care of because there's a trust fund. It's too bad there wasn't something in the Constitution about that, because I find it ironic that everybody around this table who has pension plans are rigorously governed by ERISA, fiduciary responsibilities, prudent man and all this sort of thing. And yet with numbers that are hundreds of times bigger than that, everybody's money. None of these principles apply, and we've spent the money. So it's just too damn bad that we permitted off-budget, fictitious accounting techniques. That's not a constitutional issue, but it's what I think led to this problem. Yes?
I think we have an opportunity now in the sense that we have a relatively low unemployment rate. We've had expanded tax receipts. We have a president who cannot run for re-election again. So he's got a couple more years left in his final term. We've had umpteen bipartisan commissions over the years to quote unquote study the problem and come up with alternatives. This is really the time to do it. You say 1999, and it is 1999, because if it isn't 1999, it isn't going to happen. We're just going to postpone it.
It's the perfect time, and it's a benign period demographically at the moment, which is good. Incidentally, while on balance I'm optimistic, never underestimate the capacity of politicians to be a touch disingenuous under certain circumstances. My friend Burstein here came back from the Renaissance weekend to say you would not have enjoyed the discussion of the president, I believe you told me, who kept referring to the trust fund keeping the system solvent until the year 2029. And I was disappointed to hear that because I've talked to the president several times about this, and he is the single most informed policy wonk that has ever occupied the White House. Just trust me on that. So I happened to see the president, when was it, in February somewhere, and he said he wanted to talk to me about entitlement. At the end of a very intense discussion where he showed total knowledge of the CPI, about the affluence test, about retirement ages, and so forth. I said, well, how often do you get to be one-on-one with the president? So why don't I just take a shot at it? Mr. President, you don't believe in this trust fund business, do you? He said, oh, God, no. He said, everybody knows the pay-as-you-go system and all that matters is the annual operating deficit. I said, well, I was relieved. Except at Kansas City, if you watch television, there was a chart presented by the White House that showed the problem was totally taken care of till the year 2029 by the trust fund. So I asked one of the aides, how does this come about? And they said, well, it's politics. Okay. So it's going to be a bumpy road. Everything, I agree totally with you. And you didn't mention a good stock market, which kind of makes people optimistic. Everything, the stars are aligned properly at the moment. As I say, I think the odds are at least 50% something's going to happen. But politicians do strange things. Labor unions are very powerful. You got Gephardt. You got a friend here from France. I haven't mentioned political problems in Europe. I thought the ARP was formidable until I went to a conference in Europe. And I said, oh my God, I'll take our problems anytime compared to the problems in Europe. Labor unions in this country are very potent. By and large, they're not sympathetic to reforming the system. On the Kerry Danforth Commission, we had 31 members, 20 senators and congressmen, 11 of us from the private sector. 30 out of the 31 people signed a report that was path-breaking. It said the current programs are totally unsustainable. By the year 2030, every dollar of tax revenue would be required to pay for entitlements. There would be nothing left for interest, defense, the FBI, or anything, and something had to be done. And these are Republicans, Democrats. One member didn't sign that report. Guess who it was? The head of the coal miners union, who is the number 2 or 3 man in the labor movement. So the labor movement will put a lot of pressure on this issue, I'm afraid, against this. You know Mr. Gephardt is running for office. I think you know Mr. Gore is running for office. It'll be very interesting to see how the politics of this play out when they confront reform. The AARP, in my opinion, has never met a reform that they like. And in the Kerry Danforth Commission, we had an interesting dialogue that's on videotape. You remember Al Simpson, the senator from Wyoming, had a wonderful sense of humor. Peterson was P, and he was next to him, and the ARP testifies, and he and I say, well, this is our opportunity here. They had just testified on the great need on Medicare to pay for prescription drugs, to pay for long-term care, and there's a whole bunch of specific benefits on top of the current program that they were for. They were models of specificity when it came to whatever they wanted to add. So in my usual delicate way, I attacked them of diversion, disingenuousness, and something else. I forgot. It was denial. That's it. It was a series of alliterations. And I said, you were remarkably specific when it came to what you wanted more. Let's talk about how we're going to pay for what we now have, because we all agree, except for one person, it's sustainable. They became models of confiscation and ambiguity. We'll be willing to work with you. Well, we say, you're an organization that has had plenty of time to think about this. Start working with us. What do you want to do? I was in Chicago last week at a Songus Policy Forum, senior representative of the ARP. We could not get a single reform recommendation out of them. There are a lot of generalities about how it's a problem. We're going to have to work together, and with goodwill we can solve it, and a lot of soothing rhetoric. So I think everything's aligned. It's the best chance we've had, certainly in the 15 years by far. But there are other forces that are on the other side of this question. And one of the biggest political questions in the next century is when the young people are going to get active in politics, because they're a little bit like that kid in the philosophy class, in which the philosophy professor says, what's worse, ignorance or apathy? And some kid from the back of the class says, I don't know and I don't care. I don't know at what point the political dynamic. There's some wonderful young people's groups, Third Millennium is one of them, and they're getting college chapters because they realize it's their future we're talking about. So the situation has never been better, but on the other hand, don't underestimate the forces of denial and the forces that really don't want to do anything. Any other? Yes, sir.
Actually, brief question I have. Why has it been that a generation that has had such a shared cathartic experience as Depression and World War II has not been able to solve this problem previous to this? And what gives us hope that generation that is going to have to solve this problem has not had a shared cathartic experience, say, Vietnam?
Well, since I'm of that generation, I wondered about it. Remember, ours is a generation that fought the World War. We had the GI benefit plan for education. We built a mass highway system. And for much of our history, we were running balanced budget, budget surpluses. And then the thing shifted, as you well know. And I wish I'm not even an economist, let alone a historian or a sociologist, as to how this culture changed to my generation. I happen to be a son of Greek immigrants, and I was brought up with the American dream and parents working hard and saving and so forth. And how we got transformed into this boomer mentality of I want it all and I want it now and kind of the hell with the future is a terribly profound subject that I don't bring any specific credentials to. On the other hand, I have had the opportunity to speak to elderly groups. I was on a 60-minute show with regard to a book that I did. And Leslie Stahl, in the great tradition of 60 Minutes, said, we'll do your book if you will appear in a retirement village. That's a fairly daunting assignment with my agenda, because I'm not a politician, obviously. So I stood up there and had pictures of my grandchildren, and we shared experiences. And, how old would young Peter Carey be when this hit? And the morality of, Bonhoeffer said the ultimate test of a moral society is the kind of world it leaves to its children. And I approached it from a moral standpoint and a generational standpoint. And I presented this program, and at the end of it, Leslie Stahl said, all right, you're going to vote yes or no. How many of you will vote for the program he's presented, which is what I laid out today? And I was just amazed, 150 people there, and all but about 5 of them said I could support that program. And I learned from talking with them that the minute the elderly hear that there's a fair program that doesn't rob their kids but protects them in the event that they have tough times, that they're vulnerable, understandably, they're worried about something happening to them, they relax. So I said to them, I'm really puzzled. How many of you are members of the ARP? And virtually everybody put up their hand. I said, how on earth could you be members of the ARP and support a program of Pete Peterson? And I said, they don't represent us on policy. We just get travel discounts, health care discounts, prescription drugs, insurance, and so forth. So, we've got this superstructure in Washington in which the conventional wisdom is you can't touch this third rail and so forth. That's not my experience when you talk to the public. Surveys are now showing that 89% of the American people think we ought to reform Social Security. And the system is not secure. You know the cliche finding that twice as many young people believe in UFOs as believe they're going to get Social Security. I have never been more optimistic that there can be change if you don't frighten people. You see, if you don't scare them into believing that they're going to be living a life of poverty. And that's why I think it is very important that we emphasize that there will be a safety net there for people that need it. If you start removing that, then I think you'll have an impossible political problem, because the politicians can play them to the fear syndrome. But there isn't any reason you can't have a safety net and do what I propose. Have I exhausted you?
One more question?
What do you think the chances are of increasing the retirement age?
Well, it has to be done in a humane way. For example, this fellow Trumka was his name, was the head of the coal miners union. He's now the number 2 man of labor union. If you were the head of the coal miners union, you would react to the idea of increasing retirement age with predictable, restrained lack of enthusiasm, put it gently. You're going to have to come up with something, in my opinion, that takes into account physical aspects of people who are not in good enough health to work longer. But the blunt fact is that, thank God for medical and other lifestyle changes, the vast majority of people that are 70 are fully capable, or 68 are fully capable of working. But you must do it gradually. All of this must be done gradually. And to me, the great case for starting in this great benign period we have now, of doing it, is you then have 10 or 20 years to prepare for this. And the worst thing you can do is to wait for a crisis and then have to do it suddenly. I think if you do it gradually and you make allowances for people that are disabled and so forth, it's a tough sale, but I think you can do it gradually. It is an absolutely indispensable part of the solution. I've written a book on the subject of the benefit cuts. It's well over 2/3 or 70% of it. It's the most important thing you can do to reduce benefits. The most important thing.
Okay. On that note, we'll wrap it up. Thank you very much, Mr. Peterson.
Thank you.